Hello everyone, welcome to Cheongfuli Weekly Report. We bring you the latest price and market analysis of China's steel market every week. Spot prices weakened this week. So far, the spot price of rebar has dropped by 20 yuan per ton week on week, while hot rolled coil has fallen by 10 yuan per ton. Market trading sentiment cooled down and overall market activity continued to decline. From a macro perspective, global markets expect geopolitical tensions to ease, and crude oil prices have fallen to relatively low levels. The US CPI rose 4.2% year-on-year in May, raising market expectations for a 25 basis point interest rate hike by the Federal Reserve within the year. In China, a gas explosion occurred at a coal mine in Qinyuan County, Shaanxi Province. Since then, coal safety supervision has been tightened across the region, leading to a sharp drop in coking coal output. Although production resumption has accelerated gradually, the actual output remains at a low level. On the supply side, total steel supply posted a slight increase. The total output of 5 major steel products stood at 8.5705 million tons this week, up 45,500 tons week on week. Pig iron output remained flat week on week. Given the current profit margins of steel mills, pig iron production will stay at a high level going forward. Byproduct rebar output edged up to 2.1459 million tons, a week-on-week increase of 24,400 tons. Hot rolled coil output rose moderately to 2.9952 million tons, up 42,900 tons week-on-week. Demand remained sluggish this week. The apparent consumption of the 5 major steel products was 8.4502 million tons, down 37,500 tons week on week. Specifically, apparent consumption of rebar reached 2.0732 million tons, falling 58,500 tons week on week. Apparent consumption of hot rolled coil came in at 2.9365 million tons, rising 24,900 tons week on week. The market holds a pessimistic outlook for the future, and speculative demand has diminished. In terms of inventory, the inventory accumulation of the 5 major steel products accelerated this week. Their total inventory reached 15.602 million tons, an increase of 120,300 tons week on week. Byproduct, rebar inventory was 6.6096 million tons, up 72,700 tons week on week. Hot rolled coil inventory stood at 4.2045 million tons, rising 58,700 tons week on week. Overall, China's steel market trended weaker this week. Steel output saw a slight uptick, while demand declined and inventory accumulation accelerated, pointing to a deterioration in overall fundamentals. Rising raw material prices have squeezed steel mills' profit margins, yet mills still have willingness to ramp up and resume production. As domestic downstream sectors gradually enter the off-season, there is limited room for a further pickup in construction and procurement demand, and underlying pressure on the supply-demand structure is building up. Since the price correction starting in May, China's steel export orders have increased week on week, and overseas demand can partially offset the slow domestic consumption, keeping the steel market in a tight supply-demand balance in the short term. Meanwhile, tight domestic coking coal supply provides solid cost support for steel prices. The market is generally bearish on the outlook, but constrained by shrinking raw material supply, steel prices will fluctuate and stay weak in the near term. Going forward, key monitoring points include changes in steel supply and demand, as well as the progress of coal mine production resumption. Based on the above analysis, here is our operational suggestion. Purchase steel according to actual demand and properly control inventory risks. Institutional views hold that the traditional peak demand season for steel is now in its late stage. With increasing rainfall in southern China, market demand will keep weakening and supply-demand pressure will gradually mount. Nevertheless, raw material prices will remain supported in the short term due to safety inspections at domestic coal mines. Steel prices are expected to move sideways with fluctuations. To sum up, steel prices will generally remain volatile. We need to closely track changes in steel inventories and domestic coking coal supply. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.